Nothing new on the TTF and NBP that are still moving sideways. So today our attention is turning to the EUAs and the German power markets, where we are expecting a weak open this week. We are approaching some really important support levels, and we need to see if we actually break or hold. Right now, it's like trying to catch a knife. Hello, everyone. My name is Marcello Kolax. I'm the managing director at Clever Markets, and today I'm going to walk you through the European energy charts for the week starting 10th of November 2025. Before we get started, of course, as always, everything I say here is not real trading advice and just my personal opinion. The TTF sentiment poll hasn't really changed for 4 weeks in a row. The bulls and the bears and the neutrals are still equally represented, which is perfectly in line with what the market is actually doing, with the TTF moving within its sideways range. The front page of the Clever Markets dashboard is also rather neutral on the hourly and daily charts for the TTF and NVP. German power and EUAs still retain a chance at bullishness, but this is very strongly challenged, so we are not strongly bullish on these two intraday markets. All right, let's have a look at the charts. So this is what we are seeing on the TTF front month this week. So we are not really bothered with the weekly chart because nothing really has happened for months and months and months now, and we are just more neutral inclined. So let's have a look at the TTF front month daily chart. That's a little bit more insightful. Last week we ended with this little bit here. Please do not confuse this with bearish engulfing that leads the price lower. That's not how it works. So usually if you are identifying this as a bearish engulfing candle pattern, which means you have a small green body and a bigger red body engulfing the previous green body, it is a reversal candle pattern, so we need something to reverse, and there's nothing to reverse, right? So ideally, this pattern would happen after in a pre-existing uptrend that then reverses that to the downside. Hasn't happened. We have come in from above to below, so this here is nothing. This is not a pattern. I'm just mentioning this because it is a very common misconceptions for some traders. So do not take this as a bearish pattern. What it is, however, it is showing us that the market is testing one more time the rectangle support near 31. And for now, I'm expecting the market to continue sideways for, well, there's no specific time frame for that. We do not have a preferred breakout direction. As you can see, our scenario twos are the break, and scenario one is simply continuation. On the hourly chart, it's getting a little bit more interesting because here we are dealing with a descending triangle. And here another little insight from us. So descending triangles usually continue the market lower because it's showing us that the market is willing to sell at lower and lower and lower prices, whereas the support holds firm. So that's why a descending triangle usually resolves lower. But you can see for us, that's not a preference. So we do think that there is still some room for the market to bounce and continue sideways to swing deeper into the apex of the pattern. With the trends getting shorter and shorter, the up legs and the down legs, it is also getting more difficult to make good trading decisions. So right now we're on the hourly chart, so some traders might be tempted to move on to the 15-minute chart, which still makes sense. But I would not recommend going any deeper, like the 10-minute or 5-minute chart, because that would just create too much noise for a human trader. Might be good for automated systems, but not so much for us. Now, how likely is the whole pattern to resolve lower? Do we still have a bearish, an eventual bearish leaning here? Not so much, because once again, a descending triangle, it's usually reversing or continuing a preceding trend. So if we would have a preceding downtrend, then the descending triangle would continue lower. If we have a preceding uptrend, then it would reverse the uptrend into a downtrend. But as you can see, we are coming in from the side, which simply means there is no preferred direction. We are just moving into an increasingly tighter range, showing us that the market really doesn't know what's going on right now. So if we were to push above 32, then I would say, yep, probably the bulls are in charge and continue the daily charts rectangle with yet another swing. If, however, we are stopped out at the 32, then probably the market will continue to hover sideways in this really, really tight range. If on the hourly chart the descending triangle is to be resolved to the downside, then for the daily chart that would also mean a move below the rectangle. So this would be super powerful, but right now not our strongest preference. But on the hourly chart, still please be aware of the trend and momentum tools. We can see on the hourly chart, the momentum is firmly bearish, the trend tools are firmly bearish, and we are not getting a bullish oscillator signal at all. So there is a chance for the market to move lower. So now is not the time to look for buying opportunities. I would hold out a little bit to really make sure that we are bouncing off this area. Last week, by the way, ended with a bullish piercing line candle pattern, but it wasn't confirmed by a stochastic. So an unconfirmed pattern near support, but without bullish confirmation, kind of makes this bullish setup a little bit wonky. So I do not have a preferred scenario, but the two scenarios are simply a bounce or continuation lower. So please be careful. Now is not the time to make big bets. We kind of want to see this resolve one way or another first. Let's have a look at the EUAs. Okay, so here on the daily chart, the market is still pushing a little bit higher in the grand scheme of things. Yes, I know we have had our three red candles, but zooming out, we are still within the rising wedge. And rising wedges simply show that although the up legs are getting shorter and shorter, so the bulls are slowly running out of steam, it doesn't mean that we cannot still move higher. So as long as we are within the rising wedge, the assessment remains bullish. But as you can see, we are already expecting the market to break below the rising wedge, below the 78, and this would be in alignment with the trend and momentum tools. So here we are seeing that the 8 and 12 exponential moving averages are moving a little bit sideways. We are seeing that the MACD has been making lower lows and lower highs while the market was still kind of pushing higher. So it's showing us bearish exhaustion. And also we did get a bearish oscillator signal here some time ago, which is simply kicking off this down leg. So yeah, there's a chance for this whole thing to continue lower. On the hourly chart, here once again we are also bearish inclined, at least towards the 61.8% FIB retracement. On the hourly chart, we have already pushed below the 61.8% FIB retracement, which is the correction of this up leg, this preceding up leg. So we moved below it, which is now clearing the way for the market to move towards the ascending triangle support. You can see here, this is the ascending triangle that's been in place for quite some time. And we are now about to hit the support near the 78.86. Trend and momentum tools are all bearish, so the market kind of still looks ready to continue even below the rising wedge, rising channel. And if we push below the rising channel, then it would simply make a bearish resolution even more likely on the daily chart. And now the last market that we are looking at is the German power markets. On the weekly chart, we finished the week with a shooting star candle pattern, which is usually setting the market up for a decline. But we kind of want to see a weekly close below the 87.7 before this bearish candle pattern actually works out. So what's happening on the daily chart here? Because that's where we trade this. So can you see we had this big green candle and three red candles? So this is an unfinished rising three methods candle pattern where we have one big green candle and three red candles contained within the big green candle. And what we need now is another big green candle that closes above 90, above this peak here, so we can actually see that the bulls are continuing. So from a psychological perspective, this will show us that the bears tried 3 times to push lower. They couldn't make it work, and then the bulls simply continued, especially at the old ascending triangle throwback support. This is a very important pattern to note. If we push higher, if we bounce, we could make it towards a 94, towards the ascending triangle target. If, however, we start pushing lower below the 88.5, then we would simply reintegrate into the ascending triangle and continue the sideways trend. So this is what it looks like on the hourly chart. Here you can see that the trend tools are bearish, the momentum tools are bearish, and stochastic is not giving a bullish indication. So there is a chance that we are pushing towards or even below the 88.35 support level. Here once again, trying to catch falling knives, not a good idea. Let's see what happens once we are actually here. Exactly the same is also valid for the EUAs that we talked about earlier. I want to see flow of higher highs and higher lows on the 15-minute chart, maybe. Maybe I want to see bullish reversal candle patterns with a bullish oscillator. Then I would be more secure of this market bouncing. Otherwise, I would still be bearish inclined, which would have a big bearish follow through on the daily chart. If you found this useful and you don't want to miss out on the weekly updates, then subscribe to the newsletter. We'll get this and much, much more in your inbox on a Monday morning. Everyone, have a good start into the week. See you around and bye bye.